Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're discussing US real estate with John Stoltzfus, who is Chief Investment Strategist at Oppenheimer Asset Management. There have been plenty of reasons why not to invest in real estate. Higher for longer US interest rates have been crushing the residential sector, and commercial real estate is no longer the surefire bet it once was, with many offices still only half full post-COVID, amid persistent worries over the viability of CRE loans. But it is a diverse sector, with shopping mall and cell phone towers featuring in the REITs listed on the Spider Real Estate Select Sector Fund, along with REITs for data centres and logistics specialists. As for performance, after a rebound in late 2023, the rally faded early in 2024. The sector is down around 4.5% year to date, compared to a rise of nearly 14% for the S&P 500. Well, joining me now is John Stoltzfus of Oppenheimer Asset Management. Many thanks for joining us today, John. Let's just start with the broad picture. Are any hopes for a rebound in this sector? Are they entirely based on the prospect of a more benign interest rate outlook?
Still, what matters the most is location, 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 the desirability of the property, and the demographics or the population that needs that type of property involved. So it's a selective story at this time, if ever it has been, especially now, I'd say.
So from what you're saying there, quality is of the utmost importance. So what are the parameters that make a quality investment in this space?
Well, I think that when it comes, for instance, to office towers in the big cities, I think it would be the ability of repurposing older towers, or repurposing towers that were once used for offices that now face the idea of a different type of workforce that doesn't come in every day to work. And then the quality of management that is going to operate the property, and the availability for financing that management has.
Big city office REITs have been struggling this year, as have indeed cell phone tower REITs and so on. There are many different performances, relative performances there. Give us your view on where there is value.
Yeah, well, when it comes to the cell phone towers, I think the real story there is it's a question of 5G, and the fact that 5G has yet to develop quite as it was expected to so far. And I think some of that also has to do with the competition that is occurring right now amongst carriers. And so perhaps on their part, a certain desire to be careful with how much they spend in terms of expanding their tower usage. On the other hand, when it comes to other types of REITs, a lot of times people think that malls are just the worst thing to invest in. And yet there is at least one major mall company whose REIT is doing quite well relative to others, because it's the quality of the property, quality of the neighborhood, quality of the management, and of the tenants.
What about AI? How will that impact this sector? There must be potential there, for example, in data centers, which are facing the prospect of a huge new demand on their services.
In the last year and a half, for a while there, the data centers were getting shorted by some of the biggest short sellers around, who were very negative on those, and it really hurt the sentiment on those particular REITs. But now we can't help but think, with the AI flag flying very high these days, that it is likely to be understood, and with the opportunity to get paid while you wait via the distributions, or that's the equivalent of a dividend on a REIT-oriented structure.
So I was looking at your notes earlier, and real estate actually has a rather small place in your portfolio. Is that something you'd be considering upping in the future then?
We always discuss the space, pun intended, as I like to say, when it comes to the REITs, and look for it as both a space where you have the ability to get paid while you wait, and at the same time look for opportunities where you can get capital appreciation. So a total return potential story.
Okay, John Stoltzfus, Chief Investment Strategist at Oppenheimer Asset Management. Many thanks for sharing your thoughts with us today. And that is your roundup of the US real estate sector. I'm David Pollard, and this is Reuters.